Assalamualaikum and a very good day. I greet to everyone. We are from Group 6 and today we are going to present about purchasing cycle. But before that, I would like to introduce my group members.
Okay. Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is NURUL NAIMAH binti LIAS and my matric number is 1963.
Hello, Assalamualaikum. My name is Hanania Suhairah binti RUSHDAN. My matric number is 196509.
Assalamualaikum to all. My name is NURHUMAIRA binti SUHAIMI and my matric number is 198519.
My name is BATRISYIA binti NAZARULANUAR and my matric number is 199920. Okay, first and foremost, I will explain about the process involved in purchasing cycle. Next. Okay, purchasing process. A purchase transaction usually begins with a purchase requisition being generated by a department or support function. The purchasing department prepares a purchase order for the purchase of goods or services from a vendor. When the goods are received or the services have been rendered, the entity records a liability to the vendor. Finally, the entity pays the vendor and goods are received to the company. Next. Then I will explain about the source of documents involved. So one of the many documents that are involved in purchase cycle are purchase requisition, purchase order, vendor invoice, receiving report, and voucher register, accounts payable subsidiary ledger, cash disbursement journal, and checks. Number 3 is channel entries that are involved. The first transaction are purchase transaction. In this transaction, we debit purchase and we credit accounts payable. For cash disbursement, we debit account payable and we credit cash. And lastly, for purchase return, we debit account payable and we credit purchase returns and allowances. And lastly is flow chart for purchasing cycle. Okay, as you can see, this is a flow chart of purchase cycle. It basically all the processes. 2, analyze and select vendor. 3, receive goods or services. Number 4, authorize invoice and pay vendor. And lastly, number 5, record keeping. I will pass to NAIMAH.
Okay, thank you, Naili. Okay, so next I will explain about internal control. Okay, next. Okay, for the first is control environment. And one, integrity and ethical values. So this is important for an employee with ethical value to prevent something avoid from committing. This is important for an employee with ethical value because this would avoid from committing fraud. And second is commitment to competence, reflected in hiring and training of personnel involved in purchasing process. And the third one is organization structure and management assignment of authority and responsibility. Okay, the second internal control is risk assessment. Identify the relevant risk and we need to estimate their significance and assess the occurrence of risk, and then we need to decide actions to address those risks. And for the example of risk that may be happened is the risk of duplicate payments by the entity, the risk of employee fraud in purchasing process, and the last one is the effect of cost increases in the entity. Okay, so next. Okay, so information and communication. And the management need to understand the flow of purchasing transaction from the initiating the transaction to its recording in the general ledger and eventually to summarizing in financial statement. So management need to know how purchases, payments and returns are initiated and how purchase transaction accounted for as goods and services are received goods uh, or goods are returned, and what accounting records, documents, accounts, and computer files involved in the accounting for the various stages of each purchase cycle transaction. And the last, the management and need to know the process by which an entity initiates payment for goods and services. And the last one is monitoring activities. Okay, in monitoring activities, management need to provide information concerning the effectiveness of other internal control components in reducing the risk of misstatements related to the purchasing cycle, which is the purchasing process. Okay, for example, is ongoing feedback from entity supplier concerning any payment problems or delivery problems. So next, about the inherent risk. Okay, for the first, industry-related factors. In industry-related factors, management need to know, is supply of raw materials adequate? And this is because the management need to know this because different industries have different in supply requirements for the raw material, and the high inherent risk happen if the entity that contact only a few vendors that can provide a particular item, and it will be difficult as the entity might occur problem when the vendor goes down. And the low inherent risk when if the entity that contact many vendors that can provide a particular item, it will not a problem for the entity to change to another vendor if their main vendor goes down. Okay. Okay. The second about industry-related factors is management need to know how volatile raw materials. If the entity use scarce raw material, it will be difficult for the entity to estimate the cost, as the cost of the material is volatile and the cost of material will constantly change and will cause profitability from year to year can dramatically go up and down. And the last is if the entity use a fairly and stable raw material in terms of the cost, it will make the purchasing process more easy to manage as it is easy to estimate. And the last, for inherent risk is misstatements detected in prior audits. The auditor may more aware of the same misstatements, and the previous audits help to assess misstatements in the current year. So the next is control risk. Okay. So for the first is understand and document the purchasing process. Okay. Management need to document the purchasing process that. Okay. Sorry. Management need to. Okay. document and purchasing process that go through. First, need to identify what goods and services that we will provide, and then we need to submit the purchase requisition, create the purchase order, and then we will receive the order, and then after that we will pay the goods for the goods or services. And second is plan and perform tests of controls. Management need to identify the controls to prevent or detect and correct the material misstatement, such as to do tests of controls so that we could rely on them to some degree. And the last one is set and document the control risk for purchasing cycle. So this one we need to set the achieved level of control risk. And the third part is the important assertion and the audit procedures for purchase transaction. Okay, for purchase transaction, the assertion that related is first occurrence, and the possible misstatement is fictitious purchase, and the control activities the management can apply is segregation of duties. Requisition and purchasing functions is separate from the accounts payable and disbursement functions, and the audit procedure is observation, which management need to observe and evaluate proper segregation of duties. And the second possible misstatement for occurrence is purchase recorded but goods not shipped or services not ordered. Okay, for the control activities, purchases recorded only with approved purchase order and receiving report. Okay, for the audit procedure, inspection of documents or transaction, test a sample of vouchers for the presence of an authorized purchase order and receiving report. Okay, next is completeness. Completeness, the possible misstatement might be happen is purchase is made but not recorded. Okay, the control activities is accounting for numerical sequence of purchase orders, receiving reports and vouchers. The audit procedure involved is inspection of documents or transaction, which management need to review the entity's procedures for accounting for numerical sequence of purchase orders, receiving reports and vouchers. And the next for completeness is purchase is made. Okay, sorry. Um, okay, we move to the next assertion, which authorization. Okay. For authorization, there is two possible misstatement, which for the first one is purchase of goods or services not authorized. The control activities which approve purchase requisition or purchase orders. The audit procedure for this point is inspection of document or transaction, which management will examine purchase requisition or purchase orders for proper approval. And the second is purchase of goods or services at unauthorized prices and unauthorized terms. And the control activities is competitive bidding procedures followed. And the audit procedure is review entities competitive bidding procedures. And next is accuracy. Vendor invoice recorded at an incorrect amount. Okay, so the control activities is mathematical accuracy of vendor invoice verified, and the audit procedure is recalculation, which management will recompute the mathematical accuracy of vendor invoice. Okay, so next is cut off. Purchase transaction recorded in the wrong period. all receiving reports forwarded to the accounts payable department and daily, and the audit procedures is inspection of document or transaction, which management will compare the dates on the receiving reports with the dates on the relevant vouchers. And then next is classification. Purchase transaction is not properly classified in the proper account, and so the control activities is charts of accounts and then independent approval and review of accounts charged for acquisition. So the audit procedures involved is inspection of document or transaction, review purchases journal and the general ledger for reasonable, and examine a sample of vouchers for proper classification. So the next is important assertion and audit procedures for cash disbursement. Okay. So for the first is occurrence, and the possible misstatement might be happen is cash disbursement is recorded when no payment is met. So the control activities involved is segregation of duties. The disbursement function should be segregated from the account payable function, and the audit procedure is observation. Management needs to observe and evaluate the proper segregation of duties. Next is completeness. Okay, possible misstatement for completeness is cash disbursement is made but not recorded in the records. The control activities is reconcile daily cash disbursement with posting to the accounts payable subsidiary records, and the audit procedure involved is inspection of document or transaction, review entities procedures for reconciling daily cash disbursement with postings to accounts payable subsidiary records. And the next is authorization. Authorization, and the possible misstatement is cash disbursement not authorized. And the control activities is segregation of duties. The disbursement functions should be segregated from the accounts payable functions, and the EFT and check prepared only after source documents have independently approved. And the audit procedure for the first is observation. Observe and evaluate the proper segregation of duties, and for the second control activities, the audit procedure involved is inspection of document or transaction, examine indication or of approval on voucher packet. And next is cut off. Okay, so for the possible misstatement is payment amount incurred recorded incorrectly. The control activities is daily cash disbursement report reconciled to electronic fund transfer and check issued. And the audit procedure involved is inspection of document or transaction, which management need to review the reconciliation. And the next is classification. The possible misstatements is cash disbursement charged to wrong account, and the control activities is charge the accounts, and the audit procedure inspection of document or transaction, which management need to review the cash disbursement journal for reasonable for account distribution. And I pass to next person. Thank you.
Next, proceed to purchase case. Purchase case based on the questions of group 6. First, require, list and describe the audit work you would perform on the computer nominal ledger system, and in particular on the audit procedure you would perform to verify the accuracy of purchase transactions which are posted to the nominal ledger. So the audit procedure I would perform to verify the accuracy of purchases transaction which are posted to the nominal ledger. Since from the questions on purchase case in group 6, it says that Fenton Distributor Company employs a bookkeeper who is responsible for posting the sales and purchase ledger and maintaining the nominal ledger. So I will prove that the bookkeeper was updated with the monthly posting to the nominal ledger of all purchases transactions by applying analytical procedure in comparing dates that the bookkeeper recorded with the prior concerned month, whether it is recorded in the right accounting period. Inspection of document or transaction could also done in tracing all the purchasing transaction to the nominal ledger in the right amount. Next procedure will be a specific test will perform which tracing the purchase transaction from the invoice to the nominal ledger by inspection of document or transaction. By doing that, the total invoice value will be traced to the nominal ledger. Next will be audit procedure on inspection of document transaction, which make an examination of the invoice expenses and the expenses amount to check whether it is recorded in the right amount on the detailed computer list for the month concerned, since the company using a standard computerized accounting package. It can be done by inspection of document or transaction with examination the list and recalculation by recompute the mathematically accuracy in the detail list on the computer. Then once the examination have done and it is matched, then the total item in the detail list will be traced to the nominal ledger. Next, I will proceed to math.
So next, I will present about the next question of this purchase case, which required us to give audit procedures to verify the validity and accuracy of journals posted to the nominal ledger. So the first one is about test to verify the validity and accuracy of journals posted to nominal ledger. Firstly, I would like to check the opening balances at the start of financial year from the opening trial balance back to the closing entries on previous year's accounts. After I have checked, then each item would be agreed to the nominal ledger, ensuring that both the value and analysis are correct. This opening posting also should be the first entries in the new year, as all nominal ledger balances should have been set to 0. Second, ensure that the year-end balances of cash and bank on nominal ledger is agreed as in the cash book. Next, test on petty cash payments. Firstly, verify that transactions are correctly posted to the right nominal ledger account and supported by vouchers. This will include checking that transactions are valid and coded to the correct expense category. Second test on petty cash payments is ensure that petty cash balance in the nominal ledger is agreed with the petty cash book at the financial year end. Next, on the test on adjustment journals, I must check that all manually written adjustment journals were supported by documentation and have been authorized by managing director. And second, need to investigate thoroughly the main cause of recurring errors in order for the management to avoid this action in the future. And then for the third one to test on the adjustment journals is examine that the journal correctly transfers the item to the right account where the adjustment is due to the wrong account number being used. And lastly, a test to verify the accuracy of the year-end balances on the nominal ledger. First, I would like to reconcile the difference in nominal ledger balance for cash book, petty cash book, sales ledger, and purchase ledger to the balances at the year end, so that both balances are the same. And then second, bank reconciliation should establish the correctness of the balances on all types of bank account. For instance, I'm sorry. For instance, I'm sorry. And then the last one is the test to verify the accuracy of the year-end balances is that we should carry out a review on the financial statements to ensure that the material changes in assets, expenses, revenues, liabilities, and share capital are justified and explained. I think that's all from us. Thank you.